Hello and welcome to another update video about Solana. I want to start on the larger time frame. Here we still seem to be in this wave 4 correction. We talked about that now, I think for the last 1 or 2 weeks, that this wave 4 might have started. And the support area here, especially on the daily chart, remains unchanged. Support is between $163.15 and $220. I know a lot of you have been waiting for a pullback. Well, here is one, and I'm still going to watch for higher prices as long as we're holding above $168, even though I would prefer that in this wave 4 correction, the price doesn't even break below 179, because that's the 50% retracement, and a sustained break below that $179 level would also likely push the price out of this price channel to the downside, which would definitely not be clearly bullish anymore, but still technically, because this move up from the August low is seen as a diagonal pattern, deep pullbacks are also technically valid in a wave 4, and sometimes we even get this overlap between wave 1 and 4 in a diagonal, and that would actually require a break below $163. So I cannot rule out that we have a deep wave 4, right? But overall, we can only work with standard Fibonacci levels. And it's all about, in Elliott wave, it's about having those highly reliable setups, which typically are 1-2 setups. Well, if we don't have a 1-2 setup, surely you can trade a wave 4 pullback. But if it's not in an impulse, but in a diagonal, it's going to get tricky. I mean, just compare that to the last wave 4s that we had on the XRP chart, which was locally impulsive. And great. I mean, we had one setup that worked out, the second one, the triangle, and here another one. And that is because we have very, very clear parameters when we have impulsive, non-overlapping price action like that. On the Solana chart, we have very messy structure to the upside, especially on the micro level, which isn't very clear. And therefore, it's just more difficult to track and to trade than an impulse like on the XRP chart. So when we deal with this structure here, we also can observe this ascending price channel actually, and we have on this channel a center line. The price is still above the center line, which can offer at least temporary support. I showed you that in the last update, and it provides some support at the moment together with the $220 23.6 Fibonacci retracement. So it's something to be aware of. As you can see, the center line has provided support before and has provided resistance before. And as long as we're holding above the $163 level, I'm going to watch for one more high in wave 5 of 5 of 1. So still bullish, yeah, but a temporary setback or pullback, which is great because a lot of people were waiting for one. But let's see how far this actually extends out. Let's take a look at the smaller time frame. I see 2 potential pathways here for Solana. The support area here on the smaller time frame is of course the same, but you have a little bit more detail. And actually I've added today this blue Fibonacci extension zone that is located between $186 and $207.81. Now, why is this one important? This one is important because if we take a look at the microstructure, yeah, the microstructure within this wave 4, we're dealing with an ABC structure there, obviously, right? And the C wave, standard C wave targets, the C wave would usually react to these Fibonacci extensions that I've added to the chart, specifically the 100% Fibonacci extension at 207.81. Okay, there's a bit of an overlap there, area of confluence around $196 to $200. So that's another cluster of support. I think it would look good if we get there. But for now, this is one pathway in this correction. Well, another one would be that this B wave that presumably topped on Friday, the 29th, is extending. A wave, and then the B wave is just extending a bit in an ABC itself. We go down. But this is where I always say, microstructures, especially with this double bottom, it doesn't look finished. So yes, we could get a bounce, but it wouldn't change structure. It would simply lead to a delay in a recovery. So the microstructures in these corrections, they don't really matter so much. I mean, you can track them, but you have to be flexible. Important is that the bulls really turn up before we break below that already mentioned $163 level. I would prefer that we don't even break below the 50% Fib level. And if we take a look at this quite large support region, the blue zone is an additional area of interest. So if we now see a break directly above the last swing high located here at 239.70, I'd say it's likely an extended wave B. I don't think that a major low is in place in this wave 4 yet. First of all, the wave 4 is not long enough compared to the larger wave 2 on the larger time frame. And also double bottom rarely is a substantial reversal, but it could definitely be that we get a bounce in an extended B wave from here. I'll keep you updated. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.